What's up, everybody? Welcome back to Invest and Talk. Today we're going to be talking about should you have a Roth IRA. Before we begin, there's a couple things we want to go over again today. Number one, you got to hit that subscribe button. Number two, hit the bell button so you can get notifications. Number three, give it a thumbs up so other people can watch this. Some algorithm that YouTube does. And number four, this is just a disclaimer. I'm not a financial advisor. I'm not telling you what to do. These are just my opinions backed up by facts. Should you have a Roth IRA? First, we want to talk about what is an IRA. The IRA stands for Individual Retirement Account. And the Roth that goes before the IRA stands for post-tax. That means that anything that you put in this account is going to be taxed prior. With other retirement investments like just a traditional IRA or 401ks, those are retirements that you're deferring to pay taxes, and afterwards when you're ready to withdraw, you pay your taxes then. And the benefits for those is because if you're in a lower tax bracket, maybe you'll pay less taxes and so forth. But with the Roth IRA is different, is where you choose to pay your taxes up front and you can accumulate your wealth, and at the end when you're ready to withdraw it, there's no ands, buts about it, no calculations. You just withdraw it tax-free. So why do I think everybody needs a Roth IRA? In my opinion, a Roth IRA is an alternative saving account. One benefit of starting a Roth IRA is that you can withdraw your principal at any time. So here are some rules to put in money into your Roth IRA. For every year, you are only allowed to contribute $6,000 as of 2020. That is if you make less than $139,000. But if you make over $139,000, you are not qualified to start a Roth IRA. And anybody that is 50 or higher and you want to start a Roth IRA, you can contribute up to $7,000 every year as of 2020. So this money that you put in, this principal, you can take out this principal anytime that you want. And that's why I highly recommend everybody to start a Roth IRA, because if you actually need this $6,000 that you contribute every year, which I recommend that everybody should max it out, that you can just take it out. There's no penalty, there's no fees, there's no taxes on it because you've already paid your taxes. So as you start this Roth IRA and you start putting money in this Roth IRA, you're allowed to go into any vehicle of investment that you want. If you didn't know that most 401ks nowadays, they kind of categorize what your investments are going to be like based off your age. Different categories based off how close you are to retirement. You don't really actually get to pick a stock that you really like. You don't get to pick options. You just pick out a portfolio that's already pre-made that you pay a manager's fee to, and you just sit there and you wait. With a Roth IRA as an individual account, you are your own manager. You get to pick a stock. If you like Tesla, if you like Apple, you can pick those stocks and you can put it towards your portfolio. And as you build up earnings with this, by the time you're ready to take it out, there is no taxes. If you make $1 million and you take it out, that's $1 million that you made, that there's no taxes, no penalties. On the other hand, if you have a 401k or if you have just a regular individual retirement account, the traditional one, and you made $1 million and you're in a tax bracket paying 30%, well, 30% of $1 million is $300,000 that you're paying. So let's go over some rules to withdraw. Okay, so there's this 5-year rule that is in every Roth IRA. This 5-year rule is just a time frame. The moment that you open and contribute to this Roth IRA, it has a 5-year grace period. And based off of if you're over or under this 5-year period, taxes and other fees that you may or may not have to pay. And we'll go over that real quick. So you're not ready to retire yet, and you have started a Roth IRA, and you have not yet reached the 5-year mark. You need this money, the principal plus the earnings, to pay for certain things. Well, that's where it comes in handy with the Roth IRA. There's a couple of things that you can take this money out for the very first time without paying any penalties, but you do have to pay taxes on your earnings. If you're buying a home for the very first time. Number 2, educational expenses. Number 3, birth or adoption expenses. Number 4, disability. And number 5, any medical expenses. So if you are 59 and under, less than 5 years into this Roth IRA, and you want to take withdrawals from it, if you meet that criteria, you do not have to pay any penalties. You do, however, have to pay taxes on the earnings that you made. Now, let's say you're still not ready to retire, but you have already had the 5-year grace period. So you started a Roth IRA 5 years ago. Now it is time to withdraw the principal and some earnings to pay for a qualified subtitle, which is buying a home, if you have a kid, medical expenses, other stuff like that. After 5 years, you don't have to pay any penalties and you don't have to pay taxes on the earnings. Starting a Roth IRA, what I call it, is just an alternative savings account. How much is your savings account paying you for you to put money in there? Right now, let's just say a beautiful 1% that they're paying you. That is 1% that if you put $6,000 in, that's $60. There's plenty of stocks, blue chip companies like Coca-Cola, IBM, stocks out there that are paying a dividend yield of 4% or higher. So in theory, you can put your money in a Roth IRA, buy Coca-Cola stocks, and make a 4 or 5% annual return. And anytime that you want to just take out the $6,000 because you need it, you can just take it out, just like a savings account. So just a quick summary to go over what a Roth IRA account is. Individual retirement account. It is post-tax. You pay your taxes up front. When your time to withdraw it, there is no taxes, no penalties. There is a 5-year grace period. If you do not meet the 5-year grace period and you do qualify in one of those subtitles that I talked about, you can withdraw your money plus the earnings without any penalty, but you do have to pay taxes. Now, if you do meet the 5-year grace period, you can withdraw your money plus any earnings in those subtitles without any penalties or any taxes. You can contribute as of 2020 if you make less than $139,000, $6,000 a year you can put in. And if you're 50 years or older, you can put up to $7,000 a year if you don't make more than $139,000. So guys, I hope you enjoy that video. Everybody should have a Roth IRA. I think it is a great thing. It takes nothing to open. Don't let these terminologies and these fundamentals fool you. You literally just log into any broker you want. You click apply for Roth IRA, fill out a couple simple informations, and boom, you have a Roth IRA. From there, you can trade, you can make any investments that you like. And like I said, it is a great alternative to a savings account. I recommend that to my family members as well. You can have a great stock that barely goes down or barely goes up that yields a 4 or 5% a year that is beating any CD, that is beating any saving account that you can enter your money into. Well guys, I hope you enjoy. I will see you next time. And again, don't forget to subscribe. Don't forget to leave it a thumbs up, and I'll see you next time.